This conference will now be recorded.
Very good afternoon, ladies and gentlemen. On behalf of our Honorable Secretary General, Dr. G.P. Agarwal and Dr. Sanjeev Nayak, Executive Secretary, WASME, I, Megha Jha, Deputy Director, WASME, heartily welcome Shri Sanjeev Pandey, Deputy General Manager, NCLT, SBI SAR Corporate Center, Mumbai, Mr. Anil Goyal, Chairman, and Mr. Nitin Jain, Senior Partner at AAA Insolvency Professionals LLP, and accepting our invitation for the webinar. It's my privilege to welcome all the dignitaries who have taken out their valuable time to participate in this webinar. Let me brief about WASME, a global organization having member representatives in more than 100 countries, spearheading the cause and development and promotion of SMEs worldwide through policy advocacy, information dissemination, conferences, seminars, events, trainings, publication, network linkages, and many more since 1980. WASME has the consultative and observer status of United Nations. Let me introduce Dr. Sanjeev Nayak. Dr. Sanjeev Nayak currently working as an executive secretary at WASME, looking after global operation, around 25 years of rich experience in strategy research, consultancy, projects, contributed 18 research papers and actively associated with 15 ministries of Government of India, Harvard Business Review, and ResearchGate, serving as board committee member of Symbiosis University, Noida, India, NDIM, New Delhi MentorX, and IAF, recognized by UNESCO Paris, France, Ministry of MSME, Government of India, SP Jain Global Management School, Dubai, UAE, Tata Consultancy Services, Delhi University, Times Group, Economics Times, Bennett University, Greater Noida, India, MentorX, Tiplas, Mumbai, Ashtak, India Today, NTPC India, author of a book titled MSME, Crash of or Opportunity in COVID-19, published by Lab Publishing Europe. Handing over mic to Dr. Sanjeev Laik, Executive Secretary, WASME. Dr. Laik, please. Thank you so much.
Thank you, Megha, for nice introduction. Good afternoon, ladies and gentlemen. I am privileged to be here to welcome you. I am Dr. Sanjeev Nayak, Executive Secretary, WASME. As this is the webinar for pre-packaged Insolvency Act, and you are very much aware of that. This COVID has already disrupted our life as well as businesses, and this second wave is very powerful and powerful than the first wave, and it is I think 4 times more powerful than that. And majority of the MSMEs are the hit person. So recently, the government of India, via an ordinance, issued pre-packed insolvency resolution process, and we believe that this is the great opportunity for MSME to formulate a revival mechanism. Under the insolvency and bankruptcy code, micro, small, and medium businesses will now be able to choose a pre-packaged insolvency resolution. The step comes shortly after the government's 1-year moratorium on insolvency filings was lifted in the wake of the COVID-19 pandemic. Last year, the government raised the default amount for insolvency proceedings from 1 lakh to 1 crore. No insolvency proceedings against the MSME can be started when the pre-pack process or pack process is in progress. Instead of a formal competitive bidding process of pre-pack is the settlement of a distressed assets, a company's debt, by an arrangement between the secured creditors and investors. Now, how you can apply this prepack and what are the areas you can have? MSMEs can avail this opportunity. Actual default by MSME corporate data, minimum threshold default of 10 lakhs by MSME. Now, what are the key features of this pact? If members of the MSME have already approved the proposal by a special resolution, a pre-pack can be started. In addition, 66% of unrelated financial creditors by value must have agreed to a pre-pack settlement, and this proposal has to be under section 29A complainant, and promoters of non-performing assets, willful defaulters, and any other types of people are prohibited from presenting a resolution plan for a corporate data under section 29A. I'm not going into details as we have esteemed panelists here. They will discuss on this particular subject of pre-packaged insolvency. Now we have esteemed panelist Sri Sanjeev Pandey. Let me just introduce Mr. Pandey. Mr. Pandey is the Deputy General Manager, NCLT, State Bank of India. Mr. Pandey is the head of NCLT division at Stressed Asset Resolution Group of the State Bank of India. He started uh, he started his career with State Bank as a PO, provisionary officer, in 1986, and during his 34 years with SBI, he has worked on different assignments in commercial banking, projects, finance, stress asset management, restructuring, and rehabilitation of weak or sick units. Mr. Pandey has handled restructuring of distressed loans under PIFR, CD, RAD, other schemes. Mr. Pandey also carries international banking exposure as he was posted as head of treasury in an investment at SBI, Singapore from 2009 to 2014. Now we have got another esteemed panelist, Mr. Anil Goyal. He is the chairman of AAA Insolvency Professionals LLP. Mr. Goyal is also the most experienced IP in the country as he has concluded 15 assignments in his name and he is presently acting as liquidator in 10 companies. Mr. Goyal is a regular speaker at various forums and webinars on insolvency and bankruptcy law, valuation and management of stressed assets under SARFAEC or otherwise through structuring of debt. And we have another esteemed panelist, Mr. Nitin Jain. He is the senior partner at AAA Insolvency Professionals LLP. Mr. Jain, he has got 22 years of work experience across banks and financial institutions like Standard Chartered Bank, Bank of America, ICRA Limited, etc. Mr. Chan is managing resolutions of assets, current currency over 11,000 crore. Mr. Chan holds an MBA from Emory University, USA, and also PGDBA from NIMS, Mumbai. I'm not going into details or taking much time. I am handing over this mic to Mr. Sanjeev Pandey. He'll be just highlighting about this particular program. Mr. Pandey, please. Thank you. Are you there,
Pandey
Mr.
sir, you
Pandey?
want to share the screen? Pandey sir, do you
Yeah,
want to share the screen?
I would share screen. In fact, what we thought of that Pandey would be, uh, he would be acting as a chief guest today, and once me and Nitin Jain would speak, and then finally he would be concluding with banker's perspective. So we thought that Mr. Pandey will actually come and will actually comment on whatever we spoke. Me and
Okay, sir,
Nitin,
fine.
when we will finish, then Mr. Pandey will conclude the today's session along with the banker's perspective because he
Fine,
is
sir,
also
fine.
in the mid of policies. I would like
Fine,
to
sir.
share the screen, of course, but then before I share my
Fine, sir.
screen, I would like to thank World Association for Small and Medium Enterprise. Also, I would like to thank all the office bearers of WASME, like Dr. Sanjeev Laik, for introducing us in a very, very nice manner. I would also would like to thank the other office bearers, Dr. GP Agarwal and Ms. Megha Chadda, for giving us this opportunity to share our knowledge and experience with the audience. What we understand is that the most of the participants today would be uh, MSME entrepreneurs, and we would probably restrict ourselves in kind of MSME, how this is beneficial to MSME, and uh, explaining the provisions, in a brief manner. We would not go into clause by clause discussion. We would also not go by kind of the intricacies of making applications and the documents. All that would be, of course, when it is required later on. So we certainly would, as we would use this PPT. Me and Nitin Jain would use this PPT. So before Nitin Jain provides us uh, the most important provisions of this law, I would actually be presenting a perspective to the audience today. Sorry. No, the perspective is that this government of India was working for about a year now for doing something for MSME after having the experience of CIRP, Corporate Insolvency Resolution Process, the mainframe of IBC. After having experience of 4 years, it was experienced that the corporate insolvency resolution process, which is coercive and which is not really consensual, is not bringing value addition to the MSME entrepreneurs. So therefore, a separate structure for MSME entrepreneurs is required, which uh, keeps into consideration the continuation of the enterprise, continuation of jobs, and also the contribution to the GDP of the country. For with this objective, this structure was uh, introduced. So the government started working in the month of June 2020 when this threshold limits for MSME was changed, and it was increased to 50 crores of investment in plant and machinery and 250 crores of turnover, and that to domestic turnover excluding export turnover. This I will actually discuss in detail the how the threshold limits are to be calculated. Then on 4th of April 2021, this ordinance was promulgated by President of India, and like you can even look at the lightning speed of implementation of this law, that on 9th of April, IBBI also issued the regulations, and the Ministry of Corporate Affairs issued the rules and also a notification where the threshold limit for default for using PIRP's framework for resolving resolution of MSME corporate debtors. So that was also reduced to 10 lakhs of rupees as against rupees 1 crore for CIRP. So I would actually give a perspective to the audience today that in the main framework IBC, we are using corporate insolvency resolution process, which is in short is called CIRP. And in pre-packaged insolvency resolution process, we would call it PPIRP. So when we call PPIRP and CIRP, so the audience should be very clear that what we are talking about and how we are comparing with CIRP and PPIRP. Also, when we talk about corporate debtor, that means the company which is MSME, and because today we are only talking about corporate debtor which are MSME. So there should not be any confusion that we are talking about any corporate debtor. So whenever we are using the word corporate debtor, that means the company which is under financial stress, and I would like to consider this PPIRP framework as something for the financial resolution of the stress. The basic change in the PPIRP when we compare it with the CIRP is that in this PPIRP, there is no takeover of business by RP. The business continues to be run by the board of directors. The three basic functions of RP that is shifted to the board of directors. One, take control and custody of the business and assets of the corporate debtor. That in PPIRP, it will continue to be with the board of directors. Two, preservation and protection of the assets of the corporate debtor. That also would continue with the board of directors. Three, keeping the company as a going concern. That also is remained with the corporate debtor. The RP in this case is not supposed to do all this. The promoters continues to be running the company even during PPIRP and even after that. See, scenario is very clear. It is not at all coercive. It is mutual. When we call about CIRP, any operational creditor, any financial creditor can file an application against corporate debtor, and that company will have to go to RP, and the board of directors will lose any control on the company. So with the fear of losing control on the company, this resolution process was being challenged. It was being opposed in the various courts. So that was time consuming, and in that process, the board of directors also tried to kind of siphon off the assets, and also kind of that somehow that led to destruction, that led to kind of disruption, and the continuity of the business was also adversely impacted. Now, in this case of PPIRP, when the company, the board of directors remains in the possession, they remain in power, and they would try their luck with the PPIRP in case they get good solution. Then the company gets solution. In case the committee of creditors doesn't agree to their resolution plan, then the company continues the way it was continuing. Then they might have other options. Then they might even try, the bankers might even try differently, the promoters might even try differently. The process is quicker as against which is like extendable period of 180 days and 270 days and 330 days. This PPIRP is only for 120 days. However, in case we consider the pre-PPIRP period and also take the PIRP period, so it might even go to 240 days. So these are the basic features that we actually would like to highlight today. Implementation is already been done. See, in brief, I would only dwell upon what are the existing options available with any corporate debtor, MSME corporate debtor, which is under financial stress. One is the CIRP under Insolvency and Bankruptcy Code, which I have already explained. This is time consuming, this is very expensive, this is very disruptive, this is opposed, this is coercive, and it also is difficult sometimes that for MSME we are able to get better value from market. In most of the cases, the MSME are being managed by the board of directors. It is also considered to be a mom-pop business. So whenever there is a mom-pop business, the basic technology, the basic the key features, the key technology that is kept by the promoters. So if that is not available, those kind of contacts are not available, the business secrets are not available to anyone other than board of directors, then it becomes very difficult to sell that company in the market to anyone who actually would be new to that company. So that structure was facing some challenges in the last 4 years. The CIRP was facing this challenge, so therefore this PPIRP was introduced. Second court supervised statutory option available is under the Companies Act, section 230 of the Companies Act, where it is called compromise or arrangement under the Companies Act. So under this 230 of the Companies Act, this option is also not very popular, although it is being used for mergers, demergers, and amalgamations and acquisitions, but it is not actually very popular for corporate debt restructuring. Why it is not popular? Because every class of creditor would need 75% consent, and any class of creditors whosoever can claim 10% of the total debt, they can make an application that they should be considered as a separate class of creditor, and their voting would be required at least to the extent of 75%. There are two other structures which are out of court options, which are RBI's prudential framework, which is presently mandatory for credit facilities of more than 1,500, whereas that also is kind of out of court option, not applicable to all those lenders who are not RBI regulated. Also, it is not having any judicial stamp over it. Judicial authentication is not there. Section 53, which is a very big concept of insolvency. Let me even touch around what is section 53. That is actually a big asset for the restructuring of any kind of corporate debtor. Section 53 says that whatever assets of the company which is in financial stress and liabilities of the company, we will start allocating the assets from the top. There is a priority of disbursement. There is a priority as per waterfall arrangement. So wherever the funds finish, the assets finish, the rest of the claimants, the rest of the creditors would not be entitled to any amount from that company after the CIRP or PIRP finishes and the resolution plan is approved. So this particular section 53 is not available in this out of court options. It is also not available in section 230. So that's a bigger advantage in CIRP and PPIRP. The other thing which is actually the most important, and that is something which is I would like to say, CIRP have already handled. The scheme of compromise 230 have already handled. Prudential framework I've already handled. Now I think the most important is like the other available options with the corporate debtors under financial stress is that they can approach banks individually for any kind of restructuring. And if they somehow arrange funds from sale of any asset or by inviting some partner or some investor, then they can even go for one-time settlement. However, these two options available with the corporate debtor is not having any formal structure. Each bank is doing in their own way as per their own policy. One-time settlements are also being done on the internal board approved policies of the banks. In this also, if we are reaching to one creditor and one creditor will settle, but the other creditors will have to be handled separately, there is no kind of one lender agrees, the other lenders may not agree. We have seen this restructuring where this excess borrowings are converted into working capital term loan, funded interest term loan, some interest-free term loan, some concessional rate of interest, and also repayments are based on the earning capacity and the future business plan, some deferment of term loan installments, and also with some kind of recompense clause. In most of the restructuring proposals or OTS, we have seen that the promoter's contribution is asked by the lenders. They are also being pressurized for induction of fresh funds, and additional collateral securities are also being asked. The additional funds also can be given by the lenders, but then they are like hesitating in offering further additional funds because that may even attract some kind of investigation, or some kind of fingers may be even raised on them for their due diligence and the wisdom. There is no committee approach, which is considered to be a committee of lenders. It is only the committee within the bank. There is no formal structure of meetings, there is no formal structure of approvals, and there is no timeline. And the corporate debtor can make rounds and rounds of all these banks, and this situation may not be fruitful. Section 53 is not available, and the in OTS also. So see, like when I say all this, I have seen the lenders are not feeling comfortable. Number one, because there is no judicial stamp. Number two, there is no public, there is no competition. Whatever promoters are saying, they have to just believe about the assets of the company. But in this case, PPIRP, there is a competition. The public can also be invited for submission of resolution plans. Then I have seen that in this restructuring model, rather the banks would be rather more active when they come to know the about actual situation about the company. So they might even start SURFACE, or they might even start the other things. So with this perspective, now I would actually ask Nitin Jain to explain the provisions of the PPIRP in brief, because ultimately I would be explaining the three concepts, which is very, very important. One is what is the base resolution plan, what is significantly better resolution plan, and what is best resolution plan. Secondly, I would also be sharing my experience of apprehensions of the bankers and apprehensions of the MSME corporate debtors about this PPIRP, and the kind of remedies available, or the answers available in this framework against all those apprehensions. I would now hand over to Nitin. Nitin, would you like to share your own PPT, or you would like to continue with this PPT?
I can have my own PPT.
So
Can you want to share the rights to me?
So
I will
Nitin
just
sir,
Share
I'll
the
be
rights
the
to me.
presenter.
Okay, make me present. So in the meantime, I want to just say that can you see my screen?
Yes, we can.
So yeah, in the meantime, as Anilji was explaining, that the main two difference between PPIRP and one-time settlement and restructuring, I would say the main two differences are basically, as he said very rightly, that in any OTS restructuring, what the issue over there is that Section 53 is not valid. So whatever dues you have, statutory dues you have, whatever supplier dues you have, whatever operational creditor dues you have, all that is not settled. Only that specific bank due is settled. Only the bank's dues are settled. So the difference here in PPIRP is this could be similar to a restructuring where all the dues, the government dues, the supplier dues, everything is settled. And you, in the other process, you are alone doing this, running around. Here you have a resolution professional whose primary role is to make sure that a resolution plan is approved and submitted to NCLT in a very fast PD process. So now just coming back quickly to eligibility criteria. So as Anilji was saying that this has been customized for MSMEs in India. So there was a notification dated 1st June 2020, which came on effect from 1st July 2020, which whereby they had defined they had defined the MSME sector by both the turnover as well as the investment in plant and machinery. So this is it. So turnover, investment in plant and machinery of less than 50 crores, and turnover of less than 250 crores. That's how the definition. This is how the eligibility criteria is. And as Anilji also mentioned earlier, that the eligibility that the CD must commit a default of 10 lakh rupees. So very surprising is there is no mention in terms of what the default is with whom. It could be with a financial creditor, it could be with an operational creditor, it could be a default, but it has to be a default of 10 lakh rupees. And another criteria for a corporate debtor to be eligible for PPIRP is that he shouldn't have undergone this PPIRP process or CIRP process during the 3-year period before he starts off this PPIRP process. And he should be going under a CIRP process. So there's no provision that you're parallelly doing CIRP and PPIRP, or if a liquidation order is passed and you're trying your luck at PPIRP. So this is very clear over here that PPIRP is a very customized process. It's a very focused towards the MSME sector, and and the 29A is valid. So 29A is where the promoters can bid for it. The promoters, however, they are saying that any willful defaulter or convicted for offense or punishment or punishable with imprisonment, or if he's prohibited from trading by SEBI, he is not, those people are not eligible to submit a resolution plan, a final resolution plan to take over the company. And this is very similar to CIRP, the corporate insolvency resolution process, except I think C and H are not there, where C is essential services, because the corporate debtor is being handled, because the company is being handled by the promoter himself. Here the resolution professional is not handling the company. And H is on the corporate guarantee, if there is any corporate guarantee which has been provided. So these two are not valid in this clause, but the others are valid. So I'm not going to get into the calculation, etc. So the plant and machinery is done by the latest income tax return which you have filed, and the calculation of turnover for an MSME is done. You exclude the exports of goods or services, so you're looking at domestic. Registration of Udhyan registration is a must, because that is certifying that you are in MSME. It's a very simple process to get this done. We've done it so many times. So here we've divided this whole process into 4 parts. So how I look at it is, this is 120 days before the admission of the PPIRP by the court, before approval of start of the PPIRP process. That is 120 days back and 120 days forward. So 120 days forward is that the PPIRP has been admitted, and then it has to be completed in 120 days. So it's in all a 240-day process, very concise, and 120 days is before starting the process. So there is so before starting it, there is, you need to prepare for filing. So here we've just we've just made some key important steps in terms of how this process runs. So there is a base resolution plan, which Anilji mentioned that he would explain in greater detail in terms of what a base resolution plan is and what is a significantly better resolution plan, as a case may be. So what is important over here is there's a base resolution plan being prepared by the CD. So there is the CD, the company is in stress, the company has defaulted, so they need to restructure themselves. So they prepare a business plan, they make financial projections, they come up with whatever the best DSCR is, whatever the best interest cover ratio is. They make a detailed business plan and show that this is how they can repay the debt over a period of time, very similar to any restructuring. and possibly this is a money they can pay upfront, or there's an equity investment which could come in, which could, reduce the amount of loan to be repaid. So that is largely a business based resolution plan, or we call it BRP on a short form basis. And once a rough BRP is made, then these documents need to be submitted to the financial creditors, that is the banks in this case. So you're submitting a base resolution plan. There is a declaration by the majority of directors that you are starting this process for commencement, that the declaration, the majority of directors are approving commencement of PPIRP, and a special resolution is also being passed with a voting of 75% by the members or partners of the company, that PPIRP is being started. And other documents required were like, your balance sheet for last 3 years, provisional balance sheet, etc., etc. So all these documents you prepare yourself and you submit it to the lender. So as soon as you submit it to the lender, so you are the applicant, you are communicating your intent to start this process to the lender. And then you can give a notice to the lender by serving him a 5-day notice, whereby you're providing a notice. This is the date, time, and the venue of the meeting. And here you provide a list of creditors. So you make a list of creditors. Creditors would mean your financial, your banks, your lenders, your supplier credit, if any, your government dues, if any, your contingent liabilities, if any. You have any outstanding guarantees which have been invoked or not invoked. All that you compile together and make sure, so that it's very imperative to make sure that you put this on paper, so that the whole base resolution plan, the viability is assessed. Otherwise, it'll probably fall flat if you don't do this. So then also a name. So once the financial creditor looks into this, he's looking at the data, he's seeing this. He's also proposing, a financial creditor can propose a name of a insolvency professional to be the RP of the company. And once he does this, then he's finalizing the appointment, the fees with the RP. The lender would also look at all the documents you've given to him. He'll look at the BRP. So this is a very interactive process, where you're interacting with the financial creditor day in and day out, discussing with him, making those minor amendments or in the plan, so that the plan is something which makes sense to him. The plan, so that you arrive at some broad consensus with at this stage, not a fine-tuned consensus, a broad consensus that this is what you will look at. So you would be deliberating on the business in the base resolution plan. He would also look at whether you are really eligible under to submit you to do this PPARP process. He would verify your MSME status. He would look at whether you are eligible under 29A and few other things. And the FCs need to not be connected. So, if they're all related parties of the corporate debtor, then the operational creditors will become the COC. So in this case, if 10 OCs can become the COC member, very similar to the corporate insolvency process, where, if they are connected FCs, the top 10, 18 top 18 SOCs become. So this is the process how this runs. The base resolution plan, as we said, can be filed by the corporate debtor. So it can be filed by the partner, by the CFO, CEO of the company. And this is a very quick matrix which basically talks of, as we need to quickly verify this. So this is very important that, if supposing I'm going to say 7, 9, and 10 are applications under corporate insolvency resolution process. So as on 4/4/2021, when this ordinance came, so at that date, if there is a corporate insolvency resolution application which is pending, and then that'll gain priority. That'll gain priority. So that'll be admitted first by the court, irrespective of the fact that you are submitting this. So, however, if you've not filed, there is no corporate insolvency resolution application pending with the court. In that case, if you file this application, if this is a PPARP application which is filed, then this application will gain priority. And in case there as on 4/4/2021, there is no CIRP application filed. But supposing there is a CIRP application filed after that, and there is a PPIRP application filed within 14 days of that CIRP application, then again the PPIRP application will gain priority. And in the last case, if if the PPIRP application is filed more than 14 days of the CRP application, then the CRP application would be disposed of first. So what it is basically saying is that in cases where the CRP application has already been filed, or if the CRP application is filed and 14 days have elapsed, then in those cases the CRP application will gain priority, which is fair, is rational. However, it is also saying that in cases where the CIRP application has not been filed, or there's limited window of 14 days, where the in those cases the PPIRP application would be applicable. So this is some check which you need to do at your end before you. This is broad contents of the resolution plan, largely the name of the corporate applicant, nature of the business, any applications pending, your MSME status, your default, your evidences that the CD is eligible under 29A, your financial statements for last 3 years, your particulars of declaration by majority of board of directors, as we mentioned earlier, your special resolution passed by 75% of the members of the company, and the RP proposed by the banker in this case. And this is a checklist of the documents which are required, over here. I'm not going to go through this. So I just alluded to this. I mentioned this. So, this is the broad process where we are checking whether the CD is a MSCME or not. He is eligible under 29A. Is there any application filed with the NCLT in CIRP? Whether the default amount is more than 10 lakhs, whether he's engaged a resolution professional, and whether the financial statements are updated or not, and determination of transaction. So either this process, is very important. So you need to, if you're intending to start this process, it is important that before you pass before the majority of the directors pass a declaration to start the process, it is very important that you prepare yourself with the process earlier, in terms of making the financial statements in place, putting the assets, having the assets and liabilities clearly put in, assessing whether you have any transactions which can be categorized as preferential, fraudulent, undervalued, extortionate. So some homework needs to be done. So these are the duties of the resolution professional. So I think the beauty in this process is that the resolution professional is not managing the company. You manage the company, and the resolution professional is helping you before starting, before admission and after admission, with the prime objective that he is facilitating you to get the resolution plan passed by all the bankers, by all the financial creditors, and making sure that the compliance is taken care of. So this is the duties. So largely preparing reports, reporting to IBBI, and and his duty would cease if within 90 days. So once within 90 days you have to submit this application. Once a declaration by the directors have made, within 90 days you have to submit an application to NCLT. If that is not made, then you'll have to restart this process. So the fee of the resolution professional, though I'm not going to get into this, but the fee of so how this runs is the fee of the resolution professional is decided by the COC, but it is paid by the company, and the company will open a separate bank account, and the estimated fees which has been approved by the COC would be deposited by the company into this bank account, so that the resolution professional is independent to run this process. He's not running after or chasing money, so he's running this process. So if he needs to appoint valuers, forensic auditors, whatever he wants to do. So filing of the process. So as I said, the process, once the application file process can be filed by the partner, by the CFO, CEO, and once it should comply to the 54A, the regulations. and there's a 15,000 fee for it while filing. And you need to serve a copy to IBBI, and you need to attach an acknowledgement of that when you're filing an application to NCLT. You need to carry, as I mentioned, the checklist list of. You need to put the list of financial creditors. That is your all your list of claims. Need to list of claimants. All your financial creditors, operational creditors, your contingent liabilities, your approval of financial creditors by 66%. Of the appointment of the resolution professional, and also for commencement of this process. And you need a written consent of the RP. You also need, as I said, the declaration by majority of directors, special resolution of members, etc. So, once you file this application, the NCLT is going to look into this and see, if there's any deficiency in this application. So they'll look into this, and if there's any deficiency, they'll come back to you in 7 days. So the application has been filed, and you would then correct the deficiency and submit the application. And they have a 14-day as per law, but we've seen it in JK Jute case where this is just a direction. 14 days of direction is not mandatory on NCLT. So then PPARP shall be considered commencement and not. So this process gets commenced on the date of admission and not on the receipt of the order. So there may be a difference of 3-4 days, 1 week, that the NCLT has pronounced the order, but the order has not been uploaded on the website. So they're saying that as soon as the admission by NCLT is done, the process has started. So the RP has been appointed, and if there's any disciplinary action which is pending against the RP which has been proposed, then another RP would be appointed based on recommendations from AB, right? So I'm going to briefly cover this. As I mentioned, this timelines 240 days. So basically, as I mentioned, that this is a unique process they have designed, where it's 120 days backward and 120 days forward. So 120 days backward is preparing yourself. So if I start this process at T, where T is the time, T is the time on which the majority of the directors make their declaration. So within 60 days within 60 days of that, an approval of the lenders is required. And a notice, sorry, within 60 days of that, you need to have a meeting with the lenders. And within 70 days, you need to get an approval from the lenders to start this process. And then the RP is preparing a report and making sure that by 90th day of the date at which the declaration for starting the process has been passed by the directors, by the 90th day, an application has been filed with NCLT. And NCLT is taken assume as 30 days, and then the whole process runs. I think the process is a lot of work to be done, and it's very concentrated. So just a very quick snapshot over here, that once the process is commenced, on the second day of the process, it is expected that there is a public announcement being made, the submission of the list of claims is done, and the RP is able to confirm the claims by looking at the balance sheet of the corporate debtor, that all these the claims are correct, or there is some information required. There is a based resolution plan which you had prepared, which you were in discussion with the financial creditors before commencement of this process. That base resolution plan would be submitted on the second day of the commencement of the PIRP. And also a valuer would need to be appointed on the third day of the commencement of the PPIRP. So there's a lot of stuff, concentrated stuff to be done in the first few days. So that's why I'm saying planning of this is required earlier, so that it can be facilitated and timelines can be met. So then there is a constitution of COC. So once the claims have been received, verified, a COC is made within 7 days. And then the first meeting of the COC, once it is made, is happening 7 days after it is made. And then,
So,
there are documents.
Nitin,
Yeah.
we actually, because the process is actually required for an insolvency professional. So
Right.
in
No,
case
I
we can
I
just
will do it
focus
equally
on
quicker.
the
Yeah,
MSME audience, what
yeah.
exactly I would like to take up, because also the
So, I'm gonna share this, so very important over here is that whenever you start this PPIRP process, the moratorium is starting. The moratorium over here. So very similar to CIRP, except that, subclause 2 is not there. But because you're managing the company and essential services would continue, but there is a moratorium. So no institution of suits or continuation of pending suits, transferring, encumbering, alienating, or disposing of the corporate debtor assets, any action to foreclose, cover, or enforce security interest created, the recovery of any property. So there is a moratorium on all that for the corporate debtor. So I don't want to get into the duties of the RP and the powers of the RP. So I think this is important, that what are the obligations of the promoters during this process. So the directors continue to run the management of the company, and they will provide the best efforts to protect and preserve the value of the properties of the company and manage its operation as a going concern. And the promoters and the members shall exercise and discharge their contractual statutory rights and obligations related to the company, subject to the RP monitoring it. Right? The list of the claims gets submitted, they get verified, the committee of creditor is formed, they are approving. So I think invitation of resolution plan is there. So this is an important process over here. Before that, basically stating that, so there is a base resolution plan which is submitted. So Anilji, you want to talk about this, the invitation, or should I talk about text list?
I will cover this. I will cover
Okay,
this
you want to
part.
cover this?
I will cover this part.
Okay. So then you're going to cover this. So I'm going to just say that on the valuation of assets. So, so there is a valuer to be appointed, two valuers, registered valuers to be appointed, which the resolution professional is appointing. And there is no provision here for a third valuer. And he would estimate the fair value and the estimated realizable value in this case, right? And I think, Anilji, you can talk about your part,
Okay,
because this
so
will continue.
I would,
Yeah.
yeah, this actually the time is also a constraint, and we have our chief guest, and he would actually give us the perspective of the bankers and how the bankers are thinking about it. So if you can just stop sharing your end, I should be given the rights to share my screen. Oh, I I hope I'm audible. Yeah. So
Perfectly
You're
audible,
audible.
sir. Perfectly audible.
okay, so I would only say that this on the point of view of the MSME uh, corporate debtors. So when we talk about the base resolution plan, that's something which is very important to understand. What is a base resolution plan? So for any company which is facing some kind of financial stress or some kind of defaults, and that maybe the default is for the tax liabilities, the default is from the market, too much of market liabilities, too much of unsecured loans, or too much of secured loans. Everything taken together, if a company feels that they are over leveraged and their business model cannot service this kind of debt, they would not be able to pay their obligations, their liabilities. So that's what needs the financial resolution. So all those companies, this is one segment of company where this kind of PPIRP framework would be used. Second, anyone who actually thinks that he needs a partner in the company because of investment required, because of working hand required, and that partner is ready to come into the company, he is liking the business model, the EBITDA is positive, but the uncertainty about the liabilities, the uncertainty about the past non-compliances, and even some kind of criminal offenses actually restrict the investor, restrict the new partner to come in the company and expand the business by way of his own efforts and his own investment. Third, when any person is thinking that he has done his part in the life and he would like to transfer this business to somebody, he would like to sell this business to someone. Presently in India, the transactions of sale of running business as far as the MSME is concerned is very, very restricted. It is not happening as it is happening in the international market, and the reason is only because of the uncertainty. Nobody would like to buy uncertainty. Everyone would like to have a clean slate before he enters into a company, and he would not like to hang over all kinds of swords once he takes over a company which is running for the last 20, 25, 30 years. Because nobody knows what kind of notices, what kind of non-compliances, what kind of liabilities has been incurred by the promoters earlier. So this structure would be useful. PPIRP would be useful for that also. Thirdly, like in case any investor is coming, any investor means the investor, maybe it's a venture capitalist, maybe it's any other kind of investor who would like to invest and also let you work in the organization. That investor also would like to have this clean slate. Investor would like to see whether all kind of liabilities are crystallized at one point of time, and thereafter he would not see any contingent liabilities, he would not see any unforeseen liabilities. So the PPIRP structure would be required. The first thing which is required is like anyone at the chartered accountants that you are presently dealing with, or anyone who has the knowledge of the insolvency, he would first of all understand your stress level, he would understand your business model, he would prepare a resolution plan for you, for your company, and he will also prepare a business plan for your company, and that would be called a business base resolution plan. In that base resolution plan, you would estimate your assets, you would estimate your liabilities, and then you would make an offer to the lenders that this is what we would be able to pay you. This is based on our assets, this is based on our collateral securities, this is based on our personal guarantees, this is the maximum that we can pay you, and rest of all the liabilities we would not be able to pay you. And you actually have to tell your lenders that in case you would not agree with us, then somebody else will file CIRP application, then the CIRP application will be processed, and my company will go to somebody else, and the company will lose the lot of value. So this is this base resolution plan, which also should talk about the cause of default and how the all those causes are being dealt with in the resolution plan. So this is the base resolution plan. Then they see, like when this structure was being made, and then there was an apprehension. There was an apprehension by the lawmakers that in case the promoters are having the first right to submit base resolution plan, the promoters are having the first right to take over the company after the liabilities are crystallized, after the haircut is agreed by the committee of creditors and the adjudicating authority, means NCLT, then the promoters would not offer the factual value of the company, and the promoters will offer one, because the promoters will understand that they have the power to go, and when these banks will call resolution plans from public at large, at that time we will have the opportunity to improve our resolution plan. So they will always start with one. So to check this scenario, the regulations were made in such a manner that the committee of creditors will decide a factor which will be based on score system. Now suppose there are some financial parameters which the committee of creditors decide about a base resolution plan or about a resolution plan, and those factors can be any amount offered upfront, what is the total haircut that you are seeking from financial creditors, operational creditors, government liabilities, and after that there is a score system for everything. And the committee of creditors can always say that if the base resolution plan having a score of 100, and if any resolution plan is received from public which is having a score of 150, that is 50% better than the base resolution plan, then the committee of creditor will not give any option to promoters to improve. So this particular provision is very important, so that the promoters should give a resolution plan which is closer to the actual value of the business. So that particular resolution plan, that is called significantly better resolution plan, which will be received from public and which will fit into the parameters as approved by the committee of creditors based on the score system, based on the bid evaluation, like evaluation matrix, and that evaluation matrix would be having a score system. So in case any plan is received from public which is fulfilling the criteria of significantly better resolution plan as approved by the committee of creditor. For an illustration, I've already said that if the base resolution plan is having a score of 100 based on the parameters of the evaluation, then if the COC has approved a score system of 150 for considering a resolution plan as significantly better resolution plan, and public gives a resolution plan which is having a score of 150, then the promoters will lose their option to improve the resolution plan. So this is called significantly better resolution plan. Now I would actually shift to the what is the best resolution plan. So as an illustration, one resolution plan has been submitted by the promoters, which is called base resolution plan, and then the COC has invited through RP resolution plans from public at large. As an illustration, say the public has given 4 resolution plans, 4 different resolution applicants have given the resolution plan, and the committee of creditor has negotiated with all of them, and final resolution plan that they have submitted, that those resolution plans are also put on the same evaluation matrix which is based on the score. So any resolution plan which is the best resolution plan out of all the resolution plans received from the public, that resolution based on the evaluation matrix, based on the score system, would be called as a best resolution plan. And the best resolution plan finally will compete with the base resolution plan, which is called the Swiss challenge method, or any based on technology. Maybe it's an Excel method. Although the Swiss challenge is not used by the regulations or the code, but the 2 resolution plans which will compete would be, one would be the best resolution plan out of the resolution plans received from public at large, assuming that there is no resolution plan which is significantly better than the base resolution plan. So therefore the best resolution plan will compete with the base resolution plan based on the same evaluation matrix on the score system, and both will get opportunities again and again to improve all those parameters which are fixed by the committee of creditors and which are impacting the score system. And whichever resolution plan finally will get the best score, that resolution plan will be put to vote, and the committee of creditors may or may not approve it. I mean, even if the best resolution plan is competing with the base resolution plan, finally the committee of creditor has the final power to approve a resolution plan or not to approve a resolution plan. So if a resolution plan is approved, that will be submitted by the RP to the adjudicating authority NCLT for final approval, and this is called the PPIRP resolution. In this resolution, whatever is payable, whatever is offered in the resolution plan, all other liabilities are extinguished based on the liquidation value of the company. The resolution plans are normal. Resolution plans are having everything like the structure that we have presently regarding the resolution plans is the same in PPIRP and CIRP. The provisions regarding operational creditors, the provisions regarding dissenting creditor, the provisions regarding management and control, term of the resolution plan, the managing agency, all the provisions are same in this resolution plan also. So the resolution plan is approved by the committee of creditors and it is submitted to the adjudicating authority for approval. 66% voting share is required, and the adjudicating authority may approve or may reject. So at any stage, the committee of creditor may say that the resolution plan is not accepted and the PPIRP is terminated. So once the PPIRP is terminated, that means that the PPIRP is just terminated. That doesn't mean that the company goes into liquidation. Whereas in the case of CIRP, in case the resolution plan is not approved, the company goes into liquidation. In this case, company doesn't go into liquidation. The promoters, the board of directors are running the company and they would continue to run the company. and the banks may think for other options like CIRP, SURFACE, and the promoters may think for other options like adding a partner or bringing some more money or sell their residential house or try another. See, once this once PPIRP fails, then the promoters will lose their right to start another PPIRP for the next 3 years. So this is also a kind of there was also an apprehension that the promoters will again and again come to the lenders for some kind of relief. But the law is very clever that once the promoter loses a resolution plan, the no further PPIRP can be started in the next uh, 3 years. So I would actually, because in the various webinars that we've been doing, and we have actually seen what are the apprehensions to the lenders and how see, first of all, I will actually say why it is good for the MSME. Let me first of all start from the MSME. So I would start from the MSME. The promoters and the corporate debtors, they have been asking me questions why it is better structure for us. So the first foremost reason is that if PPIRP fails, no resolution plan is approved, then the company continues to be managed by you. There is no dent on the company except a little bit of cost that you would have to incur. There is no other adverse impact on your company. Secondly, as I said, there are various circumstances under which you would like to have that protection of moratorium. So once the PPIRP starts, you get moratorium. So no other application under section 7, 9, 10 can be filed and can be accepted. And also no other case can be filed against your company during PPIRP process. See, the other issue is that in case the promoters are not filing for PPIRP, then they are prone to insolvency attacks. Now, what could be the insolvency attacks? Any of the operational creditor can give them a notice and file an application under section 9. The financial creditors can file an application under section 7. Any of the lender can start SURFACE action. Any government authorities can even attach their assets. So why the corporate debtor should not go to go to PPIRP structure? It is not a stigma. Nobody would come to know that the company is undergoing PPIRP because there is no public notice which is being issued. It is only between the financial creditors that you would only stay as, and once the resolution plan is approved, then it will be considered as a restructured company. So there is no disruption in the business. No RP is coming to your company and managing the show. There is no bank account which is being taken over by the RP. You would continue to run your bank accounts. And see that in case you want to induct a partner and the partner is saying that I like your product, I like your factory, I like your technology, but then how to handle the past liabilities? And that partner can be rest assured by saying that yes, everything is crystallized now. You come through the PPIRP, and the PPIRP is not insolvency. It's a restructuring model. PPIRP is not insolvency. It is a restructuring model. See, any sale transaction can happen through PPIRP, as I said already. So why a company should not go for this kind of PPIRP model? See, like in case of like suppose a promoter gets some money from some sources and he wants to get rid of the bank and he also wants some discount. So why discount only from the banks? I think then we can ask for the discount from the operational creditors, from the government liabilities, from all those cases of service tax, GST, sales tax, income tax. All those cases can also rest in peace. In case we have some money, we can settle with the financial creditors and we can go through PPIRP. So like if see once the PPIRP continuing, that like it is all the liquidation value. So the only thing that we have to see as a corporate debtor, what is the value of the assets of the company and also the collateral securities offered to the banks. So if the value of the assets of the company and the collateral securities offered to the bank is higher than the liabilities, then of course you would not get any benefit of section 53, and like otherwise you would get the benefit of section 53 and you would get the haircut. So maybe at any point of time you would like to have some dilution in the shareholding. So I would advise all the companies that in case you have EBITDA positive, in case you have over leveraged your loan, and in case you are not able to service your debt, and in most of the EPC companies, infrastructure companies I have seen, they have good pre-qualification assets. They have good, but then short of working capital, they are now conducting the businesses through various joint ventures, whereas all this can be done in case of PPIRP through the main company. So all the contingent and disputed liabilities can be settled. And see, like I have seen a person who actually came to us, he says that I have been raided by the excise department, GST department, or income tax department, and there are liabilities on my head, and I feel that in case I don't do anything, they would strangulate my company, and my company would be dead after some time. So this is all that I'm trying to say, that it is something which can be managed. Now, I think when this, I would actually, as far as the apprehensions of the lenders are concerned, I would like this to be handled by our chief guest, Mr. Sanjeev Pandey. What are the apprehensions of the lender? How the lenders would treat these applications? What are the? I have many questions which everyone is presently looking after the banks, whether the banks would participate into this or not. See, one situation that I'm trying to explain here is that this structure is a formal structure. The corporate debtor gets a right to call for the meetings of the bankers, and the bankers probably would have no right to not to attend those meetings. They may take a decision, they may not take a decision, but in the meantime, the meetings would be conducted, and these will be official meetings, duly minutized, and that also will create a record that the banks actually had been offered multiple times the PPIRP processes. With this, I would invite our chief guest, Shri Sanjeev Pandey, who have immense experience of handling NCLT cases, restructuring cases, and I would keep asking in between some questions which probably have been raised by the participants also, and maybe that I would also like to stop sharing my screen so that he can speak and we can even hear you. Sanjeev Pandey.
Thank you, Gulza, and thank you, WASME, for inviting me to this august audience. As we all know, bankers play a major role in the success of MSMEs, and especially public sector banks, because we were the first to take exposures in MSMEs when many of the private sector banks were not there, and then even when they arrived, they only used to look at successful cases where public sector banks were present. So that was the strategy of many banks, including SDFC and ICICI. They were going after our good customers. But it is only the public sector banks which have always stood behind the business, especially MSMEs. And secondly, you are not only the priority sector for the banks, as we see the frequency of policy changes coming out from government. MSMEs are a priority sector for the government, for RBI, for banks. So they are a very, very crucial element for the progress of our economy. And they have got an even bigger concern or the thought process because of COVID. So many of the MSMEs have been forced into insolvency because of COVID. So as my previous speakers have already spoken about various steps taken by the government to support MSMEs during these difficult times. But from the banker's point of view, I can say that MSMEs constitute around 20% of our portfolio. So as of now, my guess is that around 20 lakh crore of credit has been extended to MSMEs out of a total overall credit of around 107-108 lakh crore in the economy. So which is a huge amount. But at the same time, if you look at the number of MSMEs in the economy, so if we pick up all from proprietorships to partnership, small businesses to corporate businesses, they may go anywhere around 6 to 7 crores. So if you look at the quantum of credit, it is minuscule compared to the number of units. And my sense is that more than 50 to 60% units may not even be having any banking relationship also. So that is one challenge which I think many of the banks are trying to get a tool to get a idea how to tackle. But coming back to the default and the resolution of default. So we all know that default can happen anytime, and MSMEs are more prone to default because they have small equity bases. They are squeezed by on the both sides by their buyers, who may be some large companies. They may delay the payments. They may stretch them in, as we see in some cases of some large corporates like these automobile companies. They squeeze their vendors, suppliers to the limit. Many other companies do like that. So that is the scenario any MSME works in. But for a banker, because bankers are generally by nature very cautious, and the moment there is a default by any business, forget MSME or a large business or a conglomerate, the first casualty is the confidence of the banker on the promoter and the business. So that is a very, very crucial commodity for any business. If you have the back of your bankers, I think you can carry through many COVID situations. But first casualty which happens is because of the bank lose confidence, and the reason for losing that confidence are many. First of all, the tendency of the borrower is to hide the problem. So that leads to lack of transparency or asymmetry of information, as we call it in the IBC parlance. So that is very, very fatal for any borrower. So don't, that is my personal advice to you, coming from my 30 years of experience in credit, that always be treat your banker just like your family doctor, physician, with whom you share all your ailments, all your pains, all your stresses. Same thing is your banker in respect of a business. He is your family doctor. So the initial first person to know about your trouble should be your banker. I have seen many cases where the company or the corporate debtor was in big trouble, but only because he was keeping the bankers fully sensitized and fully informed. So they had more confidence in him than a better working corporate, which was not disclosing the information. And we see all the time that delay in submission of stock statement. It's a kind of habit with our Indian corporate borrowers. Like balance sheets are generally provided to banks with delay of 8 to 10 months. It has no meaning as a financial data. It has no meaning after 8 months. The stock statements or the financial quarterly statement, they are provided with delay. Those all lead to some kind of lack of confidence in the borrower. Okay, the borrower is trying to hide something. So if you are regular in providing information, my suggestion is that that will be a big step in covering this gap between. Second thing, you must understand the perspective of a bank or a banker, that when a bank lends to a business and business survives and business prospers, what the bank gets? It basically gets only the interest. So it cannot tell the client, sir, because I was charging you 12% interest or 10%, and now you have earned like big profit. So let me raise your rate of interest to 15%. I don't think anybody will agree, and many of the customers will go to the court, because that is what the banking is, that our upside is limited to my interest. But look at the downside. When a business fails, we hold the garbage, we hold the corpse, we carry it to liquidation. So that is 100% losses are, or maybe 90% losses are borne by the bank. So that is the scenario bank works in. So you should appreciate the concern and cautiousness of any banker, because it has to be built in. Otherwise, if we become too bullish or too pragmatic or too optimistic, then we will be losing a lot of money. And we deal in other people's money. We don't deal in our money. So we are a kind of people who deal in financial arbitrage. So these are two basic fundamental suggestions from my side. And coming back to the Indian scenario, how we have tried to tackle this COVID stress. So I find that basic difference between the way our government has tried to tackle this stress is through, like indirectly, through policy changes and providing indirect support. Like government has provided guarantees for MSMEs up to 3 lakh crores. They have announced the limit of IBC from 1 lakh default to 1 crore default, again to support MSMEs. So many of these steps our government has taken, but government has not directly put money in the hands of the MSMEs, because that, in my personal view also, is not a very efficient way of doing things, because then you become dependent. Once you start getting money into your pocket and into your bank account, then ultimately such businesses become dependent on the government dole, and they will not survive in long term. So that is a good strategy. I cannot find fault with the strategy in US or UK. They have big money, but in India, I think that is the best strategy to support those people who can help themselves. So that is exactly what the government is trying to do. So coming back to our discussion here, so as of now, the NPL level of MSMEs is around 8% of total loans. And there is the expectation that because of this COVID stress, it may reach almost 12 to 13% of the loans. At the same time, there is a aggressive lending to MSMEs despite all these concerns. And the growth of SME loans during last financial year was 12%, as against 5% growth in the other credit, any type of credit. So you can see that we are there to support you all the time. SBI itself has come out with, I think, 10 or 12 different schemes for MSMEs. And now we will be coming out with this pre-pack scheme also, pre-pack policy very soon. We want to be the torch bearer in taking this forward. And we are already working on this, this policy. So going further into the topic, so let me start with, like, when you start to or decide to go into pre-pack, what exactly should be on your mind? Because pre-pack is for everybody, but it is not that everybody's proposal will be accepted by the banks. Banks will be very, very selective in accepting pre-pack proposals. Why? Because of many reasons. First reasons would be that the pre-pack requires that your business is viable and feasible when you are going into pre-pack. So nobody would like to revive a failed business which cannot be revived. So first job at your hand is to convince your banker that to convince him about your viability and feasibility, that your business, despite the trouble, despite some cash flow mismatches, despite the insolvency, default, or maybe NPA categorization, you still have some life left. You can still survive with some kind of restructuring or resettlement or some kind of recasting of your debt. So that is first important thing for you to do. Second important thing to do is to look inside before running to the bank. I think Mr. Goyal also shared that, and my previous Mr. Nitin also touched on that topic, that you should be very sure that you have been doing things right before going into PPIRP, pre-pack insolvency, because there will be a scrutiny, detailed scrutiny of your books of account once you are into the hands of RP. You would like to locate some avoidance transaction, and I know avoidance transaction, Mr. Goyal tried to explain, but they are a new concept in India. Maybe 90% of the MSME may not be knowing about these transactions, and they may be doing these transactions unknowingly or knowingly without knowing the consequences, and consequences are hard. Consequences are as bad as imprisonment up to 5 years under this provision of pre-pack. So you should be very sure that when you are going into this, your last 2 years transactions are above board. If not, I think you share with your bank, try to convince them that what was the reason for those transactions, and if some money has gone out, try to bring in that money so that bankers have confidence that you can pull through the process. Then once you do that, then you have to convince your partners, members, other stakeholders in-house that this process is really useful in this situation. So unless your family member, family means business family members, your staff, your directors, partners, members, they are on board, because you have to get their resolution passed. So if you have a problem there, and that resolution will be passed by more than 75% majority in case of members or shareholder. So you have to clearly have a convincing plan, a presentation for them to tell them that this is the right process to do at this stage. Third, you should look at your eligibility under the pre-PAG regime, whether you are 29A compliance, you have not done any, like you are not classified as a willful defaulter, or you have not done any avoidance transaction and all that. So you have to do a deep dive into your thing. Once you are sure of all these things, then the next step is to go to your bankers and discuss this strategy. But again, the important part of IBC and any resolution process under IBC, including pre-PAG, is that start early. You don't delay the process. Don't go to a deep trouble and then try to start the process. Start at the first stage of trouble and reach out to your bankers as early as possible so that the problem can be checked at the initial stage. If you delay too much, then you are beyond that critical stage. We have seen in Corona, many people reach the hospital late after 10 days, and they are reaching ICU and maybe sometime to a sad fate. So those kind of things should not happen. Reach out to your doctor, which is the banker here at early stage. Discuss transparently, share all your information, because transparency will help here, and try to convince him with all the supporting document and whatever you have that your business is viable. What we have seen that the bank, once he has all the information, they would also like to deep dive into your scenario, your current state of affairs, to see whether a pre-PAG or any kind of resolution process would help. So most probably the bankers would suggest a forensic audit. They will suggest the name of forensic auditor. So your job is to get this forensic audit done fast and efficiently and effectively, so that tomorrow auditor should not complain to the bank that, sir, I was not shown all the books, all information, or the party is delaying providing information. That will be kind of creating problem for you, because bank will or the auditor can get suspicious. So get this forensic audit complete very fast. Also a suggestion that you should get your assets valued through a professional valuer, so that when you work on a base plan and you have two things in hand. One, you are convinced that you do not have any avoidance transactions in your company. Second thing, you have pinpointed the exact reasons through the forensic auditor. You have to, because that will be one of the aspects he will look into, why the business failed, why it went insolvent. So that also should come from the forensic auditor. And third thing, that you should be having a valuation statement, so that bank know where the value lies here today. What is the exact situation of this enterprise in that value? Once the forensic audit is in place and the bankers are convinced, then they will suggest the, and all this before you do all this process, one important aspect is the to get hold of a very good resolution advisor. I think now we have like very good advisors. Mr. Anil Goel has a group of resolution professionals who have experience. Many other companies are there. I think almost 4,000 resolution professionals are there in the market, out of which maybe 1,000 are having good experience. So try to get hold of a very genuine resolution professional who can come in as a resolution advisor to you at early stage, so that he will help you in preparing your base plan, preparing an information memorandum, and also advising you all these transactions and the process throughout. He will not be the RP. RP will be suggested by the bankers. But this professional, for some speed, he can take you through the process in a very, very efficient and painless manner. So that is one suggestion I'd like to make. Get hold of a resolution advisor at early stage. And then once you have got the approval, in principle approval from the bank to go ahead for the process, then you put this advisor on the job of preparing a base plan. Preparation is this process, because your base plan will ultimately lead to your continued ownership of this business and the success of it. resolution. So if you look at the process, as Mr. Goyal and explained in detail, somebody's mic is open. If you can mute the mics. Yeah. So as Mr. Goyal has explained and Mr. Jain before him, this base plan is the most crucial thing, because if you look at the UK regime or the US, there it is nothing like a base plan. It is the plan which goes to the insolvency court and gets approved. There is nothing kind of Swiss challenge or EOIs after that. But here, since our policymakers have decided on a two-stage process, that once you prepare a plan, negotiate it with your banker so that they are convinced. So my suggestion for a base plan is that try to prepare a base plan which can go through COC and get approved without any impairment of your operational creditors. That will be the best plan. That is exactly the crux of pre-pack, that you can achieve it without any Swiss challenge or without any expression of interest outside. Then you can close the process within 21 days. You can file the plan within 21 days of the approval by COC or commencement of the PIRP, and another 15 days you can get the approval from NCLT, or maybe 30 days. So you can close the process in maximum 60 days. But if you put up a plan to your bankers, which is a base plan, and they go for a competition, again, it will depend on your proposal under the base plan. So what they will look for is the best value, that what they are getting or what kind of haircut or sacrifice they have to make under the plan. So if your plan provides minimum level of sacrifice or haircut, they have confidence on your ability to continue the business and grow the business. So they will like to go for the base plan, because without any hassle and short and sweet. But if you go for too much of a concessions, too much of a sacrifice, then of course they will have to go for some kind of price discovery, which is the purpose of Swiss challenge. And then there are chances that you may lose the business to some other competitive bidder, or you may have to put much more value on the table. So that is another suggestion I'd like. The bank's concern would be that what is the base plan. So, and you have ample time to discuss this base plan, because you make use of the informal part of the process. You can stretch it as long as you can, but at certain stage you have to fix into a 90-day timeline, but you can stretch the informal part of the process. But do your homework maximum during informal part. Once the PIRP is admitted, you have very, very limited time of 21 days to convince the bankers on your base plan. So the base plan should be thoroughly negotiated, discussed with the bankers. They should be on board before going to PIRP. That is the biggest suggestion I can make here, and try to make it in a way which would get a full support of the COC without calling for any expression. And that will only result when you have a minimum sacrifice or minimum kind of haircuts proposed, and no haircut for operational creditors. Again, when you apply to a banker for PIRP, he will look at the track record. So that is the first thing. Whatever you best plan you can make, whatever you do, but ultimately, as I said, it is the matter of confidence between your ability and your nature or your honesty at the banker's end, how much they can believe you. It will depend on that, because here, if you look at the process, although the debtor is in possession, debtor is in control, but process is entirely controlled by creditors. They can terminate the process at any stage. They can convert the process into CRP at any stage, or take the company to liquidation at any stage. So these are the pitfalls you can step into if you go with a half-baked kind of a plan. So be aware of the pitfalls and try to convince your banker and try to improve your track record. Like we have seen in many cases, the borrower is operating account with some lender, routing the sales to them. That is not a confidence building method. I would suggest, like, stay away from these kind of activities. As I said earlier, non-sharing of financial information, then removing current assets, providing faulty stock statement to the bank, where the stock audit shows wide difference, variation between the stock shown and the actual stock, manipulation of receivables. All these things do not create confidence among the bankers. So I would suggest desist from these things if you really want the support, because here without the financial creditor support, this process will be a stillborn and may go against you also at some stage. So have a good track record, try to maintain a good track record, good relations, good transparency in information sharing. Then only you can succeed in this process. Then coming to the formal part of the process, so when you come to the base plan is submitted before the COC and the IM is submitted. So IM will also disclose some of the actual state of affairs of your company. So if the RP finds too many faults with the IM, again you lose the confidence of the COC. So your resolution advisor should advise you to be as transparent and as detailed as possible in this information memorandum, so that it does not create any suspicion at the end of COC, because then this will create further problems. And as I said earlier, any avoidance transaction detected, because you are giving a oath under law, you will be committing a perjury in case you say that we have not committed any avoidance transaction, and tomorrow RP is able to find some transaction and he report to the court. There are a big downside for that. So you can face imprisonment and all that. So these are few things which are very, very adverse in this provisions. So be aware of these pitfalls. Then the type of base plan. So that is another feature which is important here. I think many people may like to understand the base plan as just a restructuring plan. But base plan can be any type, as in IBC. There is no limitation on what kind of plan you can create. Only thing is that that should be palatable to the financial creditors or COC. So one way can be a OTS proposal also. So if you want that, you can settle.
Alert from system is over. Low battery.
So you want to settle with the bank at one go. So then you can prepare a plan for one-time settlement. That can be a resolution plan. There can be a plan for partly converting debt to equity. But this plan, you'll have to really convince the banker, because for a MSME, if your equity is not listed, it is of no use for your bank as an investment. But for a listed company, if there is a possibility of revival, of course, that will help. But for a non-listed company, I don't know how many bankers would like to have an equity shareholding in an MSME. Then there can be a plan for some haircut and some reschedulement and restructuring of debt. That is possible, but again, the terms will depend how long restructuring you want. Because my sense is that under PIRP, two things have to happen. First of all, you should be able to revive the business within the shortest period of time, and my optimum time is 12 months. It can be taken to 24 months. You cannot seek that 5 years. Yeah, sir, I will be revived after 5 years or 3 years. No, it will not be possible. Nobody will accept your base plan. That will be thrown out of window. Only when you come with a plan where the maximum resolution time or the moratorium you seek on repayments is not more than 12 months, that is, I think, in my sense, would be the best plan, which is palatable to the financial creditors. And second thing, as you see that this pre-pack, Mr. Goyal has discussed in that, the company should not have gone into insolvency 3 years prior to initiation, and cannot go to insolvency 3 years after the initiation. Basically, what the law is trying to convey is that whatever plan is approved, whether it is a base plan or a other plan, it should be sustainable for at least 3 years. So that is one hint the law is giving you, that whatever plan you bring to the bank or to the COC, it should be able to revive the business in 1 year and should sustain the business for at least 3-4 years, so that you are not landing into another pre-pack immediately after 3 years. So that is another thing what I have tried to understand from there. And one major problem with the way banks assess the limits of the borrowers and the way borrowers use the limits, there is a basic fundamental problem here. Because banks so far are assessing the limits based on your annual reports, balance sheets. Whereas the requirement of limits is as per your cash requirement, cash flows. So there is a mismatch. So what happens is that the bank gives you a limit, and that will happen after in the implementation also. Whenever a base plan is being or the approved plan is being implemented, if the assessment is based on the balance sheet and the implementation of the cash flows, again the unit can get into a problem. Because that is a fundamental problem in Indian banking, that most of the banks assess the limits based on balance sheet, which is already submitted to the bank after 6 to 8 months of the close of the year. So it is past data, old data actually. So what I suggest that whenever you try to project some requirement of limits in the base plan, it should be based on some cash flow method, not on balance sheet method. So that will be more realistic and more useful for making the resolution sustainable. And another thing in the base plan should be the sustainable debt. Whatever debt you want to retain, so don't try to be too optimistic. So your assumptions should be very, very basic. You should never assume sales which are much higher than what you have actually achieved in last 2 to 3 years. So you should not be, in my sense, should not be maybe 10% higher than that. Second thing, your debt should be sustainable. So whatever you do, whatever debt remains on the books, it should be justified by your future cash flows, your ability to pay. And to tell you that in under CIRP, there are no fundamental norms to suggest that what plan is a feasible or viable. It is free for the COC to decide. So no ratios, nothing is provided. But here for MSMEs, this pre-pack insolvency, I assume that there will be some kind of parameters, some kind of ratios to look at what is the sustainable debt of your company. So unless you meet those kind of parameters, your plan will be rejected. So you will be working on your plan in a reverse engineering kind of method, where you put those ratios upfront, that these are the sustainability ratios, like your interest coverage ratio, your fixed asset coverage ratio, your DSCR. These are the kind of ratios which shows that in future you can sustain as a company, as a business. So you should keep those ratios upfront and start working in reverse, so that when a base plan is constructed, it has some sustainable debt which can sustain for at least 3 years. So this is all I have to say right now. Maybe I'm happy to take any questions. So thank you. Thank you.
Thank you very much, Sanjeev ji, and this is really an honor to have the banker's perspective.
Thanks, sir. Thank you so much. But I would like to take few questions. Participants are asking few questions. There is one question. How much is the extension period of completion of insolvency resolution process?
Process will be have to be completed in 90 days. As Mr. Goyal has already explained, the process time after admission. So basically, you have an informal part of the process where you have unlimited time. So you can stretch it to 6 months, you can stretch it to 1 year also. And that is the time. My suggestion is that you make full use of that period, that informal time, where you have ample time to prepare for the insolvency. Once you have got the approval of the financial creditors, 66% of financial creditor to go for PIRP, after that your countdown starts. So basically then you have very limited time, and once you are admitted, then only 90 days. So
thank you for the answer, sir. Thank you so much.
See, Megha, I would also like to add, there is no provision for extension of time. See, the extension of time, as in the CIRP, there is no provision for extension. So 120 days means 120 days. The law doesn't prescribe anything for extension.
Okay, sir. Thank you so much, sir. And I'll dictate next question from Bhuvan Madanji. Suppose base plan submitted with no haircut to operational creditors and 50% haircut to FC, whereas third party submit 70% haircut for operational creditor and 30% haircut to FC, then which plan is good for bank? The question
When
is
I'll
to
be sitting, of course, because the bank sitting in COC would be looking at minimizing their losses. That is obvious. So my suggestion during my presentation was that the best way you can make the use of pre-pack process is try to submit a plan where you can minimize the losses to the financial creditors and also no losses to operational creditors, then you can close the process in 20 days. That is what my idea. If you have proposed some wide, because then the banks will not have an incentive to go for a EOI or something. And then answering your question, if we have a 70% offer from a third party, so of course, then COC will treat it as per the guidelines given in the ordinance. So one plan has to be significantly better than the other plan. So some criteria will be decided by the COC upfront. We are working on a evaluation matrix on the basis of all these sustainable ratios. So I am working on that. So it will come with our guidelines. So based on that, the two plans will be tested and which plan gets a better number. And the ordinance says that the difference between two plans is not in the terms of amount. It will be in terms of the marking given on this evaluation matrix. So if the COC decides that significantly better plan must have 5 marks better than the other plan, the base plan, then only it will be considered. So that will be how it is.
Thank you for your satisfactory answer, sir. Next question is from Manjunatha. What if MSME has initiated proceedings before the facilitation council for recovery of delayed payments? What happens to those proceedings once RP is appointed as part of PRIRP?
Okay, can you repeat the question?
Yes, sir, I'll repeat that. What if MSME has initiated proceedings before the facilitation council for recovery of delayed payments? What happens to those proceedings once RP is appointed as part of PPIRP?
No, PPIRP can only be initiated by the corporate borrower, corporate debtor. So no other creditor can initiate. That is one clarification I can give. So when you can only initiate, nobody else can initiate this process. However, as explained in the previous presentations, in case a CIRP is going on or a liquidation process is going on at this stage, then any PIRP application will not be entertained by the court. So in last 3 years, if the CD, the corporate debtors, have undergone any PIRP or CIRP process or liquidation process, then it is not a case for PIRP. You will not get the permission for this process. Even if the PIRP application is pending before NCLT and it was filed 15 days before the PIRP application, then that CIRP application will be heard before. So that timeline is also given in the ordinance. If they are filed close to each other, say 1 week before CIRP is filed, then PIRP application will be heard by the court before the CIRP application. So these are some of the nitty-gritty of the ordinance.
All right, sir.
The other,
Next question is from Parthaji.
the other part of this question, which is I would like to add, the other part of this question was,
Yes,
like
sir.
in case the company has started proceedings to recover some money from the receivables, so then what happens to those proceedings? So as I said that this process of PPIRP is a not disruptive process. The company continues to be managed by the board of directors. Whatever proceedings, whatever actions, business decisions, whatever has been started by the board of directors, that would continue without any disruption by the COC or by the RP. So there will not be any adverse impact on any of the recovery proceedings started by the corporate debtor from its own customers also.
All right, sir. Thank you so much. So next question is from Partha Kamal Senji. Whether the banks are required to make provision for the loan amount if the credit goes for PRIRP?
Yeah. Actually, if you look at the RBI prudential norms for this resolution, RBI said that any resolution process, whether it is PIRP or CIRP, it doesn't matter for provisions. Provisions will continue to go as per the aging of the account. So if account has become substandard during the process, bank has to provide provisions for substandard if it has become doubtful. So there is no effect on the process on the provisioning for a bank. It goes as it is as per the.
See, sir, Sir Sanjeev sir,
Yeah.
I believe the RBI says that whenever CIRP starts, then the banks are required to make 50% provisions immediately on the commencement of CIRP of any company. I think that is true.
Actually, no, that was true only for the list 1 and list 2 accounts. Actually, the RBI provided banks with 2 lists initially in June 17, and then after that in December 17, where some 12 top accounts were there in the list 1 and another 48 accounts were there in list 2 of RBI. Only for those particular accounts, RBI said that the bank have to provide 50% provision at the outset, the moment they are admitted. Other than that, the IRAC norms apply as it is. So whatever is the aging process, that will apply.
So the PIRP would not have any impact on the bank's requirement to provide for.
Neither it will accelerate the provisioning, not it will decelerate. So it will be as per aging.
Okay, so sir, there is only one last question we are going to take up. When the FC is holding the personal guarantee of promoters, why do we have why do assume that the FC would be keen to revive the CD as he would like to get his money by calling in the personal guarantee and not bother about the business?
No, in that case, bank can PIRP is a option given to CD who is interested. Who is not interested, so option is gone there. The bank can always start a CIRP process and an individual insolvency for enforcing the guarantee. So that is my answer. In case the CD is interested in resolution under pre-pack, then only you get the benefit, and the if base plan is approved, then I think it will be approved subject to continuation of his personal guarantee. That is my opinion.
Sir, one last question that during the process of PIRP, whether any banks go for OTS and get settled its account, there is one question from Nagesh Ji.
Yes. So resolution plan, base plan can be in the form of a OTS. It is possible.
Okay.
Yeah.
Okay.
Very good.
Thank you so much. I'll move towards the vote of thanks. I, on behalf of World Association for Small and Medium Enterprises, it's a great honor to propose the vote of thanks to all guest speakers, participants, and WASME team. I would like to thank our distinguished speakers, Mr. Anil Goel, Chairman, and Mr. Nitin Jain, Senior Partner at AA Insolvency Professionals LLP, for excellent presentation and making this webinar interesting and meaningful. I would like to express our profound gratitude to Shri Sanjeev Pandey sir, Deputy General Manager NCLT, for his presence in this webinar. I would also like to thank Dr. G.P. Agarwal, Secretary General WASME, and Dr. Sanjeev Laik, Executive Secretary WASME, for his support and guidance. Once again, thank you all of you for making this webinar successful with your contribution. Stay safe, stay home, take care. Thank you.
Thank you.
Thank you.
Thank you, sir. Thank you.